Hello and welcome. Today, we're stepping into the financial ring for a real head-to-head battle. We're putting two major players from the minerals industry, Compass Minerals and Intrepid Potash, up against each other to see how they stack up. Let's get right to it.
So, in one corner, we've got Compass Minerals, ticker symbol CMP. They're a big established name in salt and plant nutrition. And in the other corner, we have Intrepid Potash, or IPI, a specialist in, you guessed it, potash. They're in the same broad sector, but how do their financials really compare? Let's find out.
Dang, dang. Let's kick things off with round one, size and ownership. You know, before we dive deep into the nitty-gritty, we gotta ask the basic questions. Just how big are these companies and who's backing them?
First up, let's talk about market capitalization. Now, what is that really? Well, think of it as the company's total price tag on the stock market. If you wanted to buy up every single share, this is the number you'd be looking at. It's a super quick way to get a feel for a company's size.
And here are the numbers. Whoa! Compass Minerals is clocking in at almost $759 million. Meanwhile, Intrepid Potash has a market cap of about $382 million. So, right off the bat, you can see Compass Minerals is about double the size of Intrepid, at least when it comes to market value. That's a huge advantage for CMP.
Okay, but who actually owns these companies? We can basically split the shares into two buckets. You've got closely held shares. Those are owned by the insiders, the executives, the bigwigs. And then you have the free float, which are all the shares that people like you and me can buy and sell every day.
So if we look at Compass Minerals, a little over 20% of the company is held by insiders. That leaves the other, 79-ish% available for the public to trade. This is a pretty typical setup, nothing too out of the ordinary here. Now let's switch over to Intrepid Potash and... It's almost the same story. Insiders hold about 19.5%, leaving a slightly bigger chunk, just over 80%, as the free float. So when it comes to who owns them, these two are actually really similar. Okay, round one clearly goes to Compass on size alone. But for round two, we're digging deeper and checking their financial health. Because, being the biggest company in the room doesn't mean a thing if you're not financially fit. It's time to look at the balance sheet. Now, a balance sheet can sound all formal and complicated, but the idea is actually super simple. Assets are just all the stuff the company owns, cash, buildings, you name it. And liabilities, that's everything it owes, like loans and other debts. The goal is always to have more assets than liabilities. And this is where we see a massive difference. Look at that. Compass Minerals, our bigger company, is carrying a much heavier debt load. Intrepid Potash, on the other hand, is operating way leaner. That's a pretty big deal. And the story doesn't stop there. It's the same thing when we look at cash on hand. Intrepid Potash has more cash for every share out there. What does that mean? Well, it means more flexibility, more power to invest, handle emergencies, or maybe even pay back shareholders. So in this round, Intrepid is definitely looking like the more agile fighter.
All right, we're heading into our final round. And this one might be the most important of all. At the end of the day, a business has to make money, right? So let's take a hard look at the profitability picture.
So to do that, we're going to use a key metric called EBITDA. I know, it's a mouthful. It stands for earnings before interest, taxes, depreciation, and amortization. But all you really need to know is that it's a fantastic way to see how profitable a company's core business is without getting bogged down by accounting details. And here is the plot twist. While Intrepid might have a cleaner bill of health financially, Compass Minerals is an absolute powerhouse when it comes to making money. The data is clear. It's got higher EBITDA, higher operating income. Its massive scale is translating directly into more profit from its day-to-day operations. All right, the rounds are over, the fight's been fought. It's time to head to the judges' scorecard for the final showdown. Let's pull everything we've learned together for a clear, side-by-side summary. Okay, let's look at the tail of the tape. For Compass Minerals, the pros are obvious. It's bigger, it's more profitable, it's an earnings machine. But the cons are just as clear. It's got way more debt and less cash on hand. Now flip over to Intrepid Potash, and it's basically the mirror image. Its biggest strengths are its financial health. Low debt, lots of cash. The weakness is, it's just smaller and doesn't generate the same level of profit.
So if we boil this entire thing down, here's the story. Compass Minerals is the big, profitable giant, but it's carrying a heavy backpack full of debt. Intrepid Potash is the smaller, scrappier competitor that's financially lean and flexible, but it just can't match its rival's earning power. At least not yet. It's a classic battle of scale versus agility.
And that really just leaves us with one final question to think about. You've got one company built on size and raw earning power, but with more risk, and another built on financial discipline and flexibility, but with lower returns. Which of those two stories do you find more compelling? Something to chew on. Thanks for joining me today.